So Hayley, if I were a new buyer, how would you help me to determine how much money I could afford to spend on a house?
Okay. So what we would do is we would start with a pre-qualification with you. We would gather all of your personal information. We would collect pay stubs from you, W-2s, tax returns if needed, stuff like that. We would then break down your income and we would analyze that on what do you bring home monthly, which is your gross income, not your net. We're able to utilize that number. And then most loan types allow you to use about 45 or 50% of that gross monthly income minus your debts that you have on your credit report. And then we're able to determine how much that payment can be for your monthly mortgage expense. And whenever we look at that, we make sure that we look at your whole principal and interest, taxes, insurance, and mortgage insurance in that payment. We then can give you that number, what your maximum qualification would be. But I'd say the most important part of that is we want to know what you're comfortable with, basically.
Yeah.
So we would then, have that conversation with you. Hey, here's what you're approved up to. It kind of equates to this sales price, this loan amount, depending on property taxes and whatnot. But, where are you comfortable? Knowing what you can do, is this okay with you? Or do you feel like you'd feel comfortable a couple $100s shorter or something like that? So we really want to make sure that we go through that and kind of get you set up to be looking at houses in the right price range. That way you're not seeing a house that you absolutely love and then you feel like your house broke after you have to make this monthly payment.
Right.
So
you definitely want to still be able to, go out for Friday night sushi or go on vacation. You don't want to put every dollar you have into that monthly house payment.
Absolutely.
So that comfort level is huge when we're talking through that with clients. And sometimes they might say, hey, I can afford, let's say, $1,500 a month, but our calculation is only showing that they can afford $1,200. Yep. What would we do in that scenario?
So that, unfortunately, is very frustrating for the customer. If they're used to making that payment, obviously your debts may have changed since you've gotten into a rental or something. So it's important that we definitely look at what you qualify for based on that, because like we talked about, we want to set you up for success for that. We don't want to set you up with something where you feel like you can afford it, and that's fine. But then a couple months later, there might be an issue with a job or a pandemic or something. Yeah. And then here we are with stuck with a higher mortgage payment. So we like to really talk through all those different things.
Yep. And if it is something you truly can afford, is just maybe for some reason income on paper of what we can qualify you on, doesn't jive with that same number, we can look at adding, a cosigner sometimes, or look at adding like bonus or overtime income. Yep. So there's lots of different factors. We're certainly looking at all of them to make sure.
Yep, and it's also very important that we get as much documentation from you in the beginning as possible to make sure everything is accurate. So 30 days worth of paycheck stubs, 2 years W-2s is important, 2 years tax returns if you have them. That way we know, what your historical income has been and what we can average out of that if we were to use bonus or overtime in those scenarios.
Yep.